What's up, everybody? Welcome back to the channel. If this is the first of my videos you are seeing, then welcome. If you've seen them before, then welcome back. This is just going to be the weekend AMC update video. I actually have something else that I have discovered, and I have a theory that is part of a greater theory that I want to get into. And I found very, very interesting what I'm seeing in the Ortex data. So before I get into all that, we're gonna start off with that. We're gonna look at the Stonko tracker data, and we're gonna go through the technical analysis of the charts and what I think is going to be happening here in the next week. So if you wouldn't mind dropping a like on the video, and if you haven't already, please subscribe. Any support is very much appreciated, as this is a new channel and I'm trying to get myself kickstarted here. So that being said, let's jump right into the Stonko tracker. We'll start with Stonko tracker. So, excuse me. We finished out the week, 34.41 closing price. Coming up here next week, we've got starting out 14,778 calls in the money, 14,000 and a half puts in the money. Relatively even. This is something else I noticed, that it's relatively even for this week. Coming up, 14, 14, 3, 3, until you get here, the October 10th, week of October 10th. Very low options, period, for that week, for whatever reason. Only 1,000 puts in the money as of now, 2,500 calls in the money. I'm sorry, this is September 17th. Big jump in the amount of open interest in the options chain. So I think you're going to see this next month, as things start picking up in the market as a whole, as things start picking up with AMC as a company and as a stock, I think you're going to see some good stuff come out of this options chain in particular this week. Starting sooner, but I think this is going to be an interesting week to watch here on the options chain coming up in September. New rules coming into play, margin requirements, just a lot of fun things to think about. Just like I said, the extra people coming back from the summer vacations and whatever, and just more money coming into the markets, hopefully we put some of these worries to rest. So that's what we got going on as far as the options. Short exempt volume is something that they've recently added here on Stonko tracker. I mean, not recently like yesterday, but pretty recently. And I found some very interesting things when I started looking, because I saw this number here, which made me see this number here, which just got me thinking, what in the world happened where there was over 2 million short exempt shares sold on those 2 days alone? But I got another video coming. I actually have already recorded the video. I'm going to upload it as soon as I upload this one. So if you want to see my video on short exempt volume, it gets into what exactly short exempt volume is, and also digs into the history with Citadel and one of their prime brokers being caught and recently being sued. The broker, that is. And so that's definitely an interesting video. Like I said, it's coming out right after this. So make sure, if you want to see that, subscribe and keep an eye out for that. So the short volume yesterday, over 60%. Absolutely insane. Absolute. Over 60% short volume. We haven't seen a number like that since, well, the day prior to earnings, or, the Friday prior to earnings. And once again, dark pool data, NA missing. Go figure. So short volume percentage extremely high yet again, and we will take a look at the chart here in a minute and look at that and see maybe why. Well, I mean, we know why, but we'll look at it and we'll check it out. Ortex, I'm gonna save. All right, so short interest was relatively even on the day, nothing notable, minus 58 bar change. Percent of free float on loan is 20%, 20.5%. Shares on loan, 104.76 million. This is all dropped Free float on loan, shares on loan dropped almost 7%. Short interest dropped over a little over 6% on the week. It's currently at 17%, 17.86%. Utilization is at 89.02%. And I've started to, the utilization is kind of what I think the utilization is fake. I think this number is totally jacked up, and I'm starting to think that the utilization is not as important as we all thought it was. And I will show you why, but let me just go ahead and get into the technicals real quick, because that's a really interesting. I want to really dig into that, what I want to show you there. But as far as the chart and how our day was yesterday, absolutely beautiful. Started off really rough there and caught itself in the low 32s, came roaring back. We had a beautiful day. We actually finished green on the day. Green on the day by how much? 1.74%. Absolutely beautiful. We've got the perfect cup and handle formation. I'm on the 5-minute here. Perfect cup and handle formation. Played out beautifully. And finished. We closed right near the high of the day. High was 34.61. I mean 60. We closed at 34.41, I believe it was. Here on the hourly chart, this movement is, I mean, the perfection and consistency is just insane to me. It's kind of weird. Like, I almost don't trust it. You know, it's almost too perfect. But I almost feel like that's what we should be doing when we're not being completely and totally shorted to crap, you know, because the short interest has gone down a little bit over, but I still think we're being shorted into oblivion. But I think we are winning the fight here, getting closer and closer to winning the fight. This downward resistance line, this line here, that line is our wedge breakout line. They are running out of time and space. If we draw up our bottom trend line here, our wedge is, I mean, 1, 2, 3, 4 days left before we got to do something. But overall, we got something that I think is very bullish and very promising here. We've got a beautiful green hammer candle, not even just a hammer candle or a doji, but a green one back above the 15 MA, and with a little room to wiggle, you know, when they try and smash it in the morning, Monday. And we've got one big long wick here, right? One big long wick here that led to a run afterwards. One big long wick that led to a run. So, you know, this third one that we just had on our daily chart, I anticipate it's going to do something extremely similar. Same thing if we go to our 4 hour, we turn off the extended hours here. Back it up, find where I am. Same deal. We got our beautiful doji candles, beautiful doji candle, beautiful doji. Every time it led to a run. Not only did it lead to a run, now I used this trend line here to mark it out, not including after hours. This move was, if you look here, you can see, I'll show you the percentage. This was a 30% move from bottom to top. This one, now like I said, this is not after hours. From bottom to top, 31%. So that being the case, I am going to take a wild stab at it and say that our next leg up here, which seems to have begun, if it's is going to be potentially at least 30%, which would put us right here at the 42.5 level of resistance. So I think it's very possible that in the coming week that we can end up breaking out of this wedge. See, and that's the thing though, if we break out of this wedge, I think we can just take off. I think we might just blast right up here and the same day test this line right away, which I think would be fantastic. So that's really all that I want to say. I mean, we're in a very steady upward channel for the last few weeks. We are, right on the verge of breaking out of this months-long downward resistance line. But I think we're in great shape moving forward. I'm looking for a continuation of this scenario right here, the breakout point at 36.5-ish. If we do it coming up here tomorrow, the next day. But either way, I think we're looking great. I think we might potentially see, like I said, another attack to push it down in the morning back into the 33.5-ish area. But I don't think they have what it takes to keep it from following this trend here. So without wasting any more time, back here on the Ortex chart, there's only a couple things that I really even want to focus on. And that is the cost to borrow, the shares on loan, and the exchange reported as well as estimated short interest numbers. Now, when I said earlier about the utilization being fake, let me just first of all click here and show you. Back here, back before our run in June, our reported estimated shortage, or a reported short interest here, was 94.5 million, but there was 150 million shares on loan almost, and the utilization said it was maxed out. So I don't think we can really, I don't know, I'm kind of starting to question the utilization. And there's another trend I've noticed, very interesting trend, that is, I think, very noteworthy. Now, if we go to, they reported, this is the exchange reported short interest on July 30th, which was reported on August 10th, was 85 million. So on August 10th, we saw on August 9th to August 10th that huge spike. That was because they had to correct their estimation. Their estimation was 8 million shares below the exchange reported back on that date, 77 million versus 85 million. So if we were to add that 8 million to the estimated short interest throughout this whole time period, starting now at August 3rd, we'll just start at August 2nd, August 3rd, we're looking at a short interest of 85 million approximately, and shares on loan of 98.5 million, which is a difference of about 14 million shares. 13.5, 14 million. If we follow that trend, we keep adding 8 million to the estimated short interest and then comparing it to the shares on loan, it stays at until the report date where they corrected it. From here, 77 plus 8 million, 85 million shares on loan, 98.5, 13.5, 14 million shares. Add 8 to this, 86.5 million shares on loan, 100 million. The difference is still the same. The next day, 1 million shares higher on the short interest, 1 million shares higher on the shares on loan. Now let's just skip ahead to after they corrected it on August 10th. 91.89 million. So 92 million shares on loan. Short interest estimated. Shares on loan, 105 million. Difference of 13, 14 million shares. That trend continues consistently all the way. You're looking at 93, 107. 97, 111, 98, 112, 95, 109, 92, 105, 92, 105, 91, 104, close to 105. There is 13.5 million shares somewhere that is either A, fake, doesn't exist, and they're just claiming that there are 13.5 million shares left because they don't want the hype over the utilization being maxed out. They see the hype over it. We need to wait till the shares on, the utilization is maxed out, then we'll start. So if they just phantom have 13 million shares phantom availability that are never actually available, never have any intentions of ever borrowing or shorting them, their utilization could have been maxed out. This has been at 13 million difference in 13 million shares for weeks, ever since they started attacking it, when they've added 20 million shares to their short interest since July 20th, 21st. Ever since then, the difference in the short interest versus the estimated, if you add that 8 million difference from the reported and the estimated, it's been 13 million shares the entire way. 14 million shares the entire way. And I don't know why. But like I said, I think there's 13 million shares that are either, they don't exist and it's a fake report, or somebody has those 13 million shares on standby for a big, huge breakout. I don't know. And then they're going to slam it with 13 million shares to make money. Or C, somebody has 13 million shares that they're trying, 14 million shares that they're saying that, hey, you can borrow them, but we're going to charge you a ridiculous amount of money. And every time it's gone under 14 million shares, and closer to the 13 million available, that cost to borrow has gone up and up and up. And they've been adding to the shares on loan instead of taking what's available. So either it's not available or it's so expensive that it's not available right now. But they've tapped into it a couple times, and that's where you see that cost to borrow go jumping up. We've seen a max. One day we saw a max of like 100% out of nowhere, right? So I think that there's something going on with 14 million shares. So let's say you have 14 million shares. Who has 14 million shares to lend out? Let me think for a second. Who could have 14 million shares sitting there trying to lend them out that Citadel's scared to touch? And the answer to that question, in my opinion, I think that it's a possibility that BlackRock is trying to say, hey, we'll give you 13 million shares with 300% borrow fee or whatever, and Citadel is not going to pay that, and B, are scared to death to accept any shares that maybe BlackRock would be loaning out to them, because let's say whatever prime broker BlackRock's working with at the time decides all of a sudden that it's too risky and they want to pull all 13 million shares back out of nowhere anytime they want. And then BlackRock can totally screw over Citadel. That's a whole nother, that's just a theory, but it's fun to think about. And there's, it's not just that, there's way more to my little theory than that, but that's a whole nother video or 17 videos. But anyway, I just find that very interesting. The difference in the short interest and the available shares on loan has not changed. It's not changed. The shares on loan and the short interest, the difference between the two has been between 13 and 14 million for weeks. So I don't know what's going on with that, but I think it's interesting to say the least. So anyways, that's all the time I'm gonna take talking about this. It's been much longer than I wanted it to go anyways, but I appreciate it if you've hung in there up till now. Thank you, and I will catch you guys in the next one.